So let's talk about 4 simple ways to create wealth in the stock market. The first is a pretty traditional way, but the returns are excellent and they really outbeat most other investment vehicles over the long run. The other 3 are ways that you can do better in the market, but they take a little bit more time, but we're going to keep it simple so that it doesn't get too complex. All right, so what are the 4? Well, first, just simply passively owning the stock market. Now, when I say passively owning the stock market, what that really means is just buying an index ETF, exchange traded fund, and owning it for the long term, not buying and selling, just be in it. And if you do that, your money doubles about every 7 years historically, because the S&P 500 has averaged a little better than 10% over the long run. Now, there's periods when it underperforms that number, and there's periods when it does a lot better. But if you just simply put your money into the market, into the S&P 500, a low-cost indexed exchange traded fund, you're going to do quite well. Now, I'm going to show you some charts in a minute, but before I do that, let's talk about the 3 other ways, and then we're going to go through exactly how to do this. So the second one is to actively own the stock market. Now, this means a little bit of a strategy for buying the market and then getting out of the market when it looks like there could be a crash. And you might say, well, that sounds like timing the market, and that's not very easy. But I'll show you a really simple way to capture most of the market's return during the good times and staying clear when the market is very weak. And essentially, if you can draw a straight line with a ruler, you can do this. Now, the third is to focus on the strong market sectors. So there are always going to be sectors in the market that outperform. And it's pretty easy to recognize when they are underway. You just have to understand some simple concepts. I'll show you that. And then finally, owning the strong stocks in the strong sectors. So once we figure out what the strong sector is, then looking to the strongest stocks, and that's where you can get some of the best returns. All right, so let's look at some charts now, and we're going to take a look at the S&P 500. This is a weekly chart going back, I think, about 10 years. And if you were just passively owning the stock market, you would say have bought back here. And you might have had a little loss at the start, at the end of 2018, and probably freaked out a little bit. And then the market made a nice run, and then COVID came, and you saw this dramatic drop. But if you just take it for the long term, you can see that, here in 2018, it was at 300. And here we are 6 years later, and it has doubled. So you put your money in, you stick with it for the long run, and you can really do well because the market generally goes up over time because of inflation, because of improving business earnings and that sort of thing. Now, if you want to get a little more active, then you're going to use a very simple concept called a trend line. A trend line is drawn from a low point and cutting across the bottom. So this is a weekly chart. You can do this on a weekly or even a monthly chart. But when the trend line is broken, just get out, sell the market. When the downward trend is broken, buy back in. So here we have a nice long upward trend line. We broke it there at the start of 2022. So you stay out of the market through 2022. When the downward trend line is broken, you get back in. And as long as you just draw a line across the bottoms, that's why I say all you need is a straight line with a ruler, just look for the pullback. So trends are formed by pullbacks. So you go up, you pull back, that defines that trend line. You go up, you pull back, you went below the trend line during the week but ended up holding above it, and that is now what defines the trend line. Same thing here, you have a move up, a little pullback, a move up, a little pullback. Pullbacks are good. They give you an opportunity to buy the market cheaper on these pullbacks. And as long as the trend line defined by the pullbacks is not broken, you're going to stick with the trend. All right, so that's the more active way to simply own the market. But I said that there is even a better way, and that is to focus on the hot sectors. Now we're going to use the same technique. You need a couple things in order to do this. First, you need to build a list of exchange traded funds that represent the market sectors. And there are hundreds of them. All you have to do is go to Google or ChatGPT and say, give me a list of the most actively traded sector exchange traded funds. You'll get a list. And you can use my website, Stockscores.com, where you can build a watch list of all these exchange traded funds. It's free to do. Just punch in the symbols, build this watch list, and then on a regular basis, maybe weekly, you check the charts for the exact same thing I just talked about, and that is a break of the downward trend on the weekly chart, ideally 3-year weekly, ideally from a rising bottom. So let's explain what that means. So here is the Global Artificial Intelligence ETF. So this is essentially artificial intelligence stocks, everything from the AI stocks to the computer companies that fuel the AI revolution. And this has been one of the strongest sectors over the last 2 years. You can see how well it has done. Well, when did it start doing well? Well, to figure that out, what you want to do is understand two concepts. One are trend lines, and two is this concept of rising bottoms. So here I have a bottom, here I have a pullback, and I make a rising bottom. Here I have a high, and here I have the tops on the way down. I can draw a line across that, and that defines a downward trend line. Simple so far, right? I broke the downward trend line, but I did it from a new low. I want to break a downward trend line from a rising bottom. So that is the point when this particular sector exchange traded fund looked likely to outperform the market. And in this case, that was about 2 years ago at $22. 2 years later, it's at 42. So it has pretty much doubled, just short of being a double, in only 2 years. Remember, the S&P 500 took 6 years to double, the most recent double, right? So from 2018 to 2024, it went up 100%. This sector ETF did that in just 2 years. And the reason is because sectors can move stronger because they have much more volatility in the sector. They are businesses that are really growing rapidly if the sector is hot. So another hot sector the last couple of years has been the gold sector. You can go to my website, Stockscores.com, punch in GLD for the gold sector, and you can see that chart over the last 3 years and see how it has grown. All right, so the last technique, and this is where you get the very best returns, but it takes a little bit more work. First, you have to figure out what the strong sectors are. So, for example, we have figured out that AI was strong starting in 2023, gold sector around that time as well. So once you know that the sector is strong and it's moving up, and one other technique you can use is look at the sector's sentiment stock score. Again, go to my website, Sentiment Stock Score, free to look up on any North American stock. And if it's above 60, then that sector has optimism, has a bullish trend. But we still want to just use those simple chart pattern recognition skills that I talked about. All right, so you find out that the sector is strong. So let's say it's the artificial intelligence sector. You want to know what the biggest companies in that sector are, or perhaps the most liquid companies in that sector are. Nowadays with artificial intelligence, it is so easy. You can go to Google and do a web search, but I find an even better way is to go to an AI app like ChatGPT and just ask the question, what are the 10 best stocks in the artificial intelligence sector? Something like that. Or the 10 largest companies in the artificial intelligence sector. And then find those that are leading the sector, the ones that are doing the best in the group. So for example, if we went to the artificial intelligence group and I look here at SOUN, it had a break of a downward trend line right here, which was just 3 or 4 months ago. The sector is strong. It's an artificial intelligence stock. Sector is strong. 3 months ago it was at $7, and 2 months ago it hit $24. So in just 3 months, that sector was up more than 300%. Now, if you read the weekly email that I write at Stockscores.com, and that's free also, go to Stockscores.com. You can register for the free weekly email. The sign up is on the front page, the home page. This is one of those stocks that I picked in that email. Every week I do a little lesson on how to trade, how to invest, and I try to pick a few stocks using different strategies. This was one of them. I don't know anything more about the company than it's an AI company in a strong sector, the AI sector. Want one more? Well, here's an even bigger company. I'm sure some of you have heard of it. This is NVIDIA. And notice that at the same time that the AI sector broke its downward trend line, so too did Nvidia. Right at the start of 2023, it broke the downward trend line from a rising bottom. That was at $20, and it's now sitting around $140. That's a 700% return. Now remember, in the same time period, the sector, the AI sector, earned 100% over the last 2 years. But here's a stock that earned 700%. It's the leader in the sector because it has the business that really drives all AI companies. This is the company that makes the chips for AI artificial intelligence, and their computers and that sort of thing. So this is where the action is. It was the most liquid. It was the most strongest performer early in the trend, broke the downward trend line, and really started to be the strongest performer. Always bet on the strongest horse. If you went to a horse race, would you bet on the horse that was in 7th place partway through the race? No, you'd bet on the leader. This is what it's all about. Nvidia is the leader in a strong sector in a market that's relatively strong. So 4 different ways to create wealth in the market. Simple way, you can double your money on average every 7 or 8 years just by buying the S&P 500. Want to get a little better performance? Try to time it using the 3-year weekly chart, looking for those breaks of trend. If you want to get even better, look for the strong sectors in the market, breaking a downward trend from a rising bottom. And then finally, look for the strong stocks in the strong sector using that same technique, breaking a downward trend from a rising bottom and then letting it run. As the trend goes, stick with it. Hope you've enjoyed this video. If so, click on the like button and subscribe to the channel. Leave a comment on what you think the next strong sector will be, and I'll see you in the next one. Trade well.